Off here inside of our dollar leading indicator, DXY is still inside of long setups. You can see here that we're looking at the monthly chart that we are inside of these massive support levels. And it really is important to note that even if we were to break the extension long levels that we are currently inside of, that we still have another full retracement long that we would run into, just like we had done coming out of February. And you can see the middle of this range is we've broken through it. It's just a big bull flag here. The trend though for the dollar on the monthly charts and the weekly charts and the daily charts in the intraday, we're going straight up in extensions. But let's just make the case here that we do, end up next week breaking through the extension long levels. We stop going straight up in extensions. Well, we're going to make a similar pullback to the one that we had made coming out of the middle of February. It's February 11th. That dollar spike that we had here, when you're looking at the S&P 500, what does that correlate with? If you look at the swing highs that we had up here, February 11th. When you're looking at the ES chart, that's when we had dipped into our previous highs. So this rounded top that you see, this very choppy environment, you see this previous high that you have up here? This is the 11th right here. So what if we were to make another full retracement on the dollar into that new full retracement long from lows? I mean, it would just be a spike higher here, one of the 1, 2, 3, 4, 5 that we've already had inside of the series. What happens if the extension, though, continues to defend here? Then we go straight down in the series. And that's what's important to understand here about the dollar, at least, above that 98,634. Bank did hit a profit target here today. There'd been really nothing unusual about us squeezing back up into a traditional, which we have not been able to really get anything going. It really hasn't even confirmed that there's a counter trend into resistance. What we had this morning was we had a pro gap down and go, and the half gap fill didn't even fill. That is in 80% probability, but the markets are really having trouble even getting up into that high probability event. It is a true pro gap and go. When you're looking at the VIX, one thing I think it's interesting to think about here from the perspective of the VIX is, yes, this spike that we had in April was massive in 2025. That's when the whole world was basically going into the tariff turmoil, right? And that was also the 20% decline that the indices had after the variable lag that happens after the Federal Reserve starts cutting interest rates. That was in September of 24. We had another September change in the Federal Reserve. It's a Fed pivot, and spiking up into these levels here, we haven't even retested the late October highs on the VIX. So there's quite a lot of room for the VIX to continue to squeeze, to rally. And what we had here yesterday was the very first pullback after the trend break, and it completed profit targets. That was a great run and essentially took us into the beginning of the daily doldrums on a Friday. Now the question is do we defend a series from our Thursday's lows to highs, or is there a possibility that we could come all the way halfway back long again? Certainly a possibility. It certainly is a possibility. What we've defended so far. This stream continues at eMiniAddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.